Great. So I'm Terrence, your last minute moderator. I work at Swan as a managing director in Swan Private, helping launch new products, including tax loss harvesting, which we launched last year, and that was really good in the bear market. Thankfully, we're no longer in the bear market. I think today's panel, we're gonna focus on macro, but also trading, because we have two traders, Tone and Ugly Old Goat, who is at Ugly Old Goat 1. The reason I know that was because I was trying to find him on X. Can each of you give a really short synopsis of who you are, why our audience should be excited to hear you guys, maybe something recent that you've done that's relevant for the audience on macro or trading? Sam, can we start with you?
I'll start. My name is Sam Callahan. I'm the lead market analyst at Swan Bitcoin. I am an investor. I'm not a trader like these gentlemen over here. But I do a lot of research. I run our podcast and I do a lot of writing. A lot of the focus is around macro developments because I consider Bitcoin the macro asset, especially heading into the 2020s, which I think are going to be a sustained structurally inflationary period, and you're going to want to own scarce real assets, and obviously Bitcoin is the scarcest of all the scarce assets. And so that's kind of my overall thesis, and it's why I'm here, and happy to be here.
All right, I'm Ugly Old Goat, and my friends call me by my first name, which is Ugly. So if you say Ugly, I'll look at you and talk to you, and you don't call me Mr. Goat. I've been in Bitcoin since 2013. I used to be a gold buck. In fact, actually minted gold coins back in the day, back in 1979. I actually am that old and had the largest private gold and silver market. I actually was the first one to decimalize the troy ounce. But that's all water under the bridge. I turned out to, I neglected my fiduciary responsibilities and wound up doing about 12 years with the feds. And came out and had nothing, started selling Dish Network, and slowly got into figuring out how to sell Dish Network and made some of the top dealers in the nation by using the phone, by using telemarketing and using voice broadcasting. Then I went into the political. That business is completely shut down. But in 2013, I started in. I'd heard about Bitcoin, and then I studied it, and wow, I caught onto it right away. I said, "This is truly an innovation," and so I bought my first Bitcoin. I'm also in my youth, in my 20s, I was security and commodities. So let me. Okay. So long story short, I'm just a trader. I teach money management. Most people get it wrong. Most people emphasize TA. I teach completely different. Number one should be money management. Number two is fundamentals. Bitcoin has the fundamentals. It's in a hyperwave. Number three, the last thing you look at is TA. And most traders do not succeed because they reverse that. They look at TA first, and then money management.
Awesome, thank you. Tone Vays needs no introduction, but some of you do not know his vast trading background, including from Bear Stearns, I believe.
Yes. Well, again, the live stream and everyone here, I'm sure everyone's familiar with my work. While I was at Bear Stearns and then JP Morgan, I was more on the risk side of the trading equation. So we were building risk models for traders, but the entire time I was building those risk models, I wanted to be a trader, and I eventually just quit to be a trader and somehow ended up a content creator, and now they're called influencers. Though I'm a terrible influencer, I really don't advertise much. I just try to teach people with as much free information as absolutely possible.
You're a terrible influencer with 250,000 followers on X, which makes me even worse. So as a substitute teacher, folks talking in the back, can you guys move to the sponsor area, please? So everyone can hear, because not everybody is quite awake yet, including your moderator. I just want to get right into it. Trading versus investing. Sam and myself are investors. You guys are traders. We don't think I don't want to speak for Sam. I don't think trading works for everyone in this room, except maybe these two, possibly one other person in this room. Waste of time, retail gets screwed, the market's manipulated, even in Bitcoin, right? We've seen Chinese exchanges allegedly do wash trading and fake price volume all over the place that has mostly gone away with the DOJ and SEC and other US regulatory and other regulator action and authorities going after these exchanges. Sam, can you comment?
Yeah, I don't know about, the odds are stacked against you with your trade with Bitcoin. I mean, you brought up market manipulation, but I just think about the volatility of the asset. I mean, if you look at Bitcoin historically, it moves in a way where for the majority of the time, it's moving sideways or down. And then there's explosive price movements upwards. So I did a lot of research earlier in the year when Bitcoin was around 23,000, and I looked at the last 5 years. And basically, during that time period, Bitcoin's price went up around 123%. Now, if somebody was trying to trade and they caught themselves on the sidelines during the 15 top 3-day moves in Bitcoin over that time period, they would have managed to lose 84%. And so you cannot be on the sidelines and miss those explosive movements upwards, because you could have been long Bitcoin for those 5 years when you're trading it. And if you would have just missed 45 days out of 1,825 days during that time period, if you would have been caught on the sidelines, you would have lost 84%. And so it's extremely important to remember that Bitcoin is a very unique asset because it's being monetized. It is a new asset class, and so there can be these explosive adoption events that you cannot predict. No model can predict, El Salvador coming out and making it legal tender, and so you can't be caught on the sidelines. And so that's why I think investing and holding is the right strategy for most people, because you just can't miss those days. And unless you're a professional trader like these guys, it might be a different story. But I just think the volatility of Bitcoin is something that makes it extremely challenging for the regular person to trade.
Yeah, so time in the market beats timing the market for 99.99% of retail high net worth folks. Unless you have inside information like the folks at Binance and others, you maybe should not do that. Unless maybe you're ugly old goat or tone vase. So let's get into your trading strategy. Talk to me a little bit more about money management. To me, an example, we were talking back in the speaker's lounge is, hang on, you want to risk a small amount of what you call equity, $5,000 or $10,000, and keep the rest of your net worth in your regular investments, the Bitcoin that you hodl and so forth.
Well, let me emphasize, because Corey Klepstein was actually the Bitcoin standard bearer in 2021 because he emphasized dollar cost averaging. And I think to cover that, but that's always what I've emphasized. One of my first articles I wrote is how to have the same results of a professional trader without the inherent risk. And you do that by dollar cost averaging, because by definition, you will buy more at lower prices than you will at higher prices. And
does everybody understand that? Why you're getting more Bitcoin if you dollar cost average the same dollar amount every month or every week? If you think about it, if you're putting in $100 a week, you're buying more Bitcoin when it's cheaper, right? Because price per Bitcoin, the dollar price of Bitcoin is lower. So you actually have more Bitcoin when Bitcoin is cheaper, buying the same $100 a week. And then when it's at 69,000 or 65,000, like in 2021, when a lot of us and our friends aped in, right, at all-time highs or near all-time highs, you're buying less Bitcoin. So if you have this set it and forget it, dollar cost averaging, you will come out better. You're going to have more Bitcoin, just dollar cost averaging, rather than trying to time it, because what inevitably happens with almost everyone, unless they're insiders or professionals, is you buy at or near the top.
Once you have your hodl through dollar cost averaging, now you have a tradable asset, and as a trader, you only want to trade a very small percent of that. For example, as a trader, if you may not have Bitcoin as your net worth, you might have it in your IRA, you might have your housing or real estate or whatever, but you're only trading a very small percent of your net worth, and you only trade a very small percent of the Bitcoin that you own. And it can be done. And in fact, I documented it. We actually documented one of my most successful years in 2021. I started with $7,000, and at the end of the year, I'd taken out $1.4 million. So, and never put a dime in. And so it can be done. What I teach is most large traders become small traders. A few small traders become large traders. And the wise large traders choose to become small traders again. Gonna let that sink in because I've been there and done that. I've been a very large trader. I used to live in Kansas City and had 10% of the Kansas City value line. And I was a large trader and lost it. And Tone's had the same experience. Once you've been through that, you've learned. And so if you're out there and you're not having successful trading, it's probably because you have what I call backwards thinking. You probably think there's magic beans, that you have this TA is going to rescue you. Well, TA is really just a matter of point A and point B, and Zeno taught us that there's an infinite number of points between A and B. So TA is this huge, infinite maze. You can't figure it all out. So you pick 5 or 6 indicators. I'm only capable of keeping 5 or 6 in my head. So I watch those, and maybe I'll adjust them and change them. Mm. But you watch those things, and that's how you apply the TA. But it's always overlapped with money management. And the second thing is your fundamentals, and you've gotten the fundamentals here. Bitcoin is the hyperwave. Bitcoin is the fundamental market that you want to be in. So it's first money management. It's second the fundamentals, which is Bitcoin. And the third thing, the last thing, is TA. And if you have an unsuccessful trading record, you probably have that reversed, and you think that the answer is in TA, and it's not.
Okay, thank you for that. Before we get to Tone, I want to give the investors on stage, meaning Sam and myself, and Sam, if you'd like to take this role, to kind of question or rebut, because you talked about taking $7,000 and going to over $1 million trading, and that's going to appeal to some people who are watching this live stream or recording, or some people in the audience. After Sam and I said, right, don't trade, just dollar cost average, you're at a huge disadvantage to insiders. You're going to miss out on the 45 out of over 1,000 days when Bitcoin rockets up if you're trying to time the market and screw yourself and have horrible returns. And also risk adjusted, you're obviously using leverage to go from 7,000 to over $1 million. If you wanted to ask him some questions or make a point.
Refute trading. Yeah. I just think that most people don't have the risk management skills, and they don't position size appropriately like these fellows are talking about. You have to go in with a plan. I think a lot of people think it's easy. They're just trying to get rich quick when they try to trade. And one thing that they don't think about is the tax consequences. So when you sell a position, if you want to come back in, you basically need it to be your short-term capital gains even to come back in just even on your position. So you need to drop 25% from that when you sold. And so you're kind of uphill battle from the beginning. You have to be right that it's going to drop at least whatever your tax consequences is at the time, whether it's short or long-term capital gains. And so people don't think about the tax consequences when they're beginner traders. They don't consider risk management. They don't consider position sizing, which is what Ugly over here is talking about. And so I think for the most people, DCAing, buying and holding, and just benefiting from Bitcoin's long-term price appreciation is the correct strategy.
Thank you for that. Tone, you have given a lot of free trading education, and you are also a trader yourself. Do you also have trading courses, or what?
Yeah, I do have trading courses, and eventually I keep slowly dropping the price. So that eventually all my education is going to be free, because being a trader is very, very challenging. Like, it is a full-time job, mentally and physically, sitting in front of a computer. I think the biggest problem that people have is they think they can be a successful trader while having another career. And that makes it incredibly challenging. And it was challenging for me as well. Like, I remember sitting through multiple meetings, with my phone under the desk, like entering trades, right? And that is probably the worst type of trading you can do because you're not fully focused on it. So number one is, yes, you can play around. You can try, give you a hand to trade. Like, you shouldn't just quit your job to be a trader. But before you start becoming a trader, you want to either trade with very small money to see if you can actually make a good percentage, or you just want to trade paper money but take it super, super seriously. Like, you're trading a fake account, but you're taking it super seriously. Because there's two dangers there, right? If you quit your job to become a trader without knowing what, like, evidence that you've been a successful trader, that's super risky. And one of the most dangerous things in trading is trading scared money. When you're trading scared money, it's going to end absolutely disastrously, right? Like, you need to be trading money that you are willing to lose. And I know, like, people say this all the time, but there's a reason why people say this all the time. There is a big difference between trading and investing. And a lot of people confuse the two.
And Tone, do you also invest, or you trade in size like what Ugly Old Goat used to do?
So my track record in investing in companies is terrible.
How about Bitcoin?
Right. Bitcoin is a little bit better. So to me, holding gold, Bitcoin, S&P 500 for the long term is investing. If you're going to be entering positions, even if you're entering positions once a month, that's on the border of trading. But if you're entering positions every week, now you're a trader. So that's a very different environment, right? So as long as you know where you stand, many people can be successful traders, but the chances of you being successful as a trader are no different than you being successful in a startup. It's equally as hard and challenging, especially at first, until you get the hang of it.
Thank you. And so would you agree that your chances of success in a startup, investing in startups or being in a startup and in trading are quite low because you're faced against, it's a playing field that is, you're at a disadvantage because number one, you're the customer paying the bid offer. And number two, you're not the market maker like Merrill Lynch or Goldman making a spread. And then number two, you're up against professionals, sharks like Tone and Ugly, and also the folks at...
Those are all disadvantages.
Yeah.
You're absolutely right? Everything is against you, right? There's better traders out there. Everything is against you. The tax situation is against you. Everything is against you. But your biggest challenge is still right here. Getting scared when selling when you should be buying, and buying when you should be selling. The biggest challenge is mentally being in that zone. There's a famous book called Trading in the Zone. Your biggest challenge is still your emotions. And another, I guess, a challenge or another problem that people have is when you start out in trading, you want to find the best trader and you want to copy them. I think that's also ends disastrously. Now, if there is a system that copies the trade automatically for you, it's kind of better. But if that person starts making too much money, too many people start copying them, and now it becomes the complete opposite. Now, when you try to copy another trader that you're following on YouTube, it always ends disastrously because you're not in the same mental on the same mental wavelength as them. They may sell and not tell you in time. They may buy and not tell you in time. You may panic when they don't. The best way is to learn as much as you can and then sit down and come up with your own strategy and your own system. Because then only you will trust that system. And other people are going to ask you, well, I want to enter your trades. And you should tell them you shouldn't do that. Because you will never have the confidence in my trades the way you should in your own system. And there is infinite number of combinations of tools you can use to be in that system. Whether you're trading options, whether you're trying to find arbitrage opportunities, whether you have a technical analysis system, or whether you have a system that's based on your own capital, which is what Ugly does as well. So the best way of trading is the one that works for you and only you, and it's not going to work for anybody else.
Yeah, so, sorry, I have a follow-up for Tom. What you said earlier made it sound like when you talk about copy traders screwing up because they don't have the same emotional and mental framework as a trader who might not tell you when they're selling or buying. To me, that's very similar to people who copy us, right, who have done the work, come to Unconfiscatable. I saw dozens of people listening to how the Blockstream Jade folks were during their demo, right? You have all these people who aped in 2021 into Bitcoin and they couldn't hold on to it, even though they had conviction they're going to buy and hold, right? Maybe they didn't lose leverage, but they still sold, obviously, many of them in 2022. Otherwise, the price would not come down from 69,000 to 14,000, right? So I feel like there's something similar there. Go ahead, Ugly, and then I want to go to we're going to switch to macro.
Yeah,
with
we'll switch to
Sam.
macro and price.
Okay, I want to hit a little bit on the copy trading because that's really great what Tone said. There's so many people on the YouTube that make these wild claims of trading, and they're all bogus. And unless they publish their trades, and there are a few that are out there. I am one. If you become one of my members, you'll see every trade that I'm doing on Bitcoin. It's right there. And another one I know is Trader Tom, but again, to copy trade him is almost impossible because he does enough volume, he gets a tremendous rate. So you don't copy trade, but be careful who you do follow because there's so many people that are out there saying, "Oh, I made these millions." You're going to have good years and bad years. I don't make money every year.
All right, so I'm before we go ahead.
Well, you shouldn't copy other
Try to
people's
speak into
strategies,
the
but you
mic.
can copy mine, which is just buy and hold and stop staring at
Yes.
charts. Go touch some grass, focus on your friends and family, and saving the money that can't be debased or inflated. And that's the problem with fiat is everyone has to be day traders and staring at charts all day instead of doing more, practical things and valuable things with their time. And Bitcoin allows you to protect your time by saving in the money that can't be debased.
And we're going to segue to macro. That's a great intro to that. I just have a quick story to share with you. I was friends with the #2 private client salesperson in the world for Morgan Stanley, which was one of the dominant private client services firms in the world. They also obviously did investment banking, institutional trading, and so forth. This guy would basically call up prospects, obviously all very wealthy because they know how to curate and funnel. And he'd say, "Hey, I have a stock tip for you, blah, 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 blah." They're like, "Who the F are you?" So if you watched, I think it's Wolf of Wall Street, somewhat similar, but more sophisticated. Guy wore Brooks Brothers suits and all that. So basically what he would do is he goes, because I was talking to him about stuff, and he goes, "Yeah, Terrence, so what I do is I call these folks, I have a list, and I'll make a price prediction. If it's wrong, I don't call them back. If it's right, I call them back, be like, 'Hey, remember I told you about that stock that was going to pop 3 months ago?'" And then keep going. And then basically he would look like a genius to some of these folks because even on a randomized basis, right, you're going to be right some of the time on some of these stock picks. And sometimes he take the same stock, say short or sell, just because it's volatile, right? And he'd be right half the time. So half the clients he had called, he would do that. I'm worried that some of these YouTube stars, right, that you're talking about, Ugly, they do the same thing under different accounts, right? Because why not? So if you have a volatile asset, it's like predicting coin flips. At some point, you look like a genius. It's like, oh my God, how did you know it's going to come up heads this time and tails the next? You're just
there are actually financial newsletters out there that take both sides of the same position, and then of course the one that wins, they get the subscribers. And that's the way they set up their financial system. I'd also like to mention trimming.
Sorry, we're gonna move on. I'm sorry. So, we have Sam Callahan up here, respected colleague, and known to many of you. You guys should follow him on Twitter. And also, I wanted to talk about bullish and bearish catalysts, macro, ETFs, if you can kind of maybe give an overview, and you guys are welcome to chime in as well, but we're kind of done with trading. I think we did a lot of that. Some of us were expecting Mark Moss and James, or many of us were looking forward to Mark Moss and James Lavish, and they were not going to talk about trading. But thank you for that. I want to take advantage of your expertise. So if it's okay with you, we'll switch totally to
Shifting to
macro,
macro.
ETFs, and so forth. Go ahead.
Shifting to macro.
Yes.
Okay, yeah. I mean, I'm bullish. I mean, how can you not be bullish? I mean, we've just had Bitcoin rip. There's a lot of bullish developments and sentiment right now around the ETF, and I think it's warranted. I think it's a big deal in terms of just flows and liquidity flows into the underlying asset. You're seeing that in kind of the inflows into these different products like the grayscales and other ETFs already on the market abroad. I think 10 consecutive weeks of inflows, $1.6 billion this year alone. And that's just a kind of a signal that people are interested and institutional investors are getting interested in this asset more broadly. And you couple that with some of these more broader macro themes in terms of people think that the Fed's done, raising interest rates. They planning on cuts now. That has led to a weaker dollar. And whenever there's a weaker dollar, that is usually a boost to all asset classes. And so the dollar is at a 3-month low right now. Bitcoin is ripping. Stock market is ripping. I think the Dow is at all-time highs now. And then you have bonds actually ripping as well because the yields are finally dropping. And so you have
Why
this.
are the yields dropping? Do you guys have thoughts on what's going on there? Are we risk-on environments, so people are just buying everything, shorting, selling, converting cash to risk assets? Because that was kind of unexpected after the so-called catastrophic 30-year auction that Zero Hedge claimed 5 basis points was a disaster. They were off. Yeah, go ahead.
Yeah, well, nothing goes up forever. The yields have been rising, and rising. And the longer term on U.S. Treasuries, for me, one of the reasons why I kept expecting them to rise wasn't even because of inflation, was because of nobody wants American debt. And when no one wants to buy your debt, you have to offer them a higher interest rate. And like you said, there was a terrible auction for U.S. long end. And I don't know, the government must have found, some buyers. And I have the same issue with oil right now. Like, it's weird. I don't have an explanation. I don't know why the price of oil has been dropping so much and the price of natural gas, especially with the conflict in the Middle East. And same thing with the bonds. It's a little bit different because they've been going up so much. It's just a pullback. I do expect interest rates to go up again because I think the risk of anyone holding U.S. government debt is very, very high. The risk of default is high for any country, and eventually it's going to come to the U.S. It was interesting what David Silver said on the prior panel where about the U.S. dollar. And I agree, the U.S. government is not going to give up control of the financial system, but there will come a time where they will not be able to hold on to it. The U.S. dollar is now going to be challenged by the BRICS and what they're doing, and the U.S. government did it to themselves by kicking Russia out of SWIFT and confiscating their assets at central banks. And now the rest of the world is going to find and join an alternative. So the U.S. dollar will lose its global control eventually. I still think they have till the end of the decade on that front. And as more and more people adopt Bitcoin, they just will not be able to stop it as much as they try. But right now, it's just the yields are coming down, but I don't think that's going to continue. I don't think they're going to go back to zero. I think they're going to stay somewhat high.
Sam, and then Ugly, if
Well,
you have a comment.
I have to push back a little bit because there has been substantial demand for long-term bonds when you look at it. That's the data. I mean, basically record demand, but there's just been so much supply. They're just issuing so much supply that even though there is record demand, there's not enough because they're just issuing so much supply. And one thing that happened recently in terms of the long yield versus the short yield was Treasury Yellen just decided, okay, we're not going to issue more long-term bonds because we are worried about the yields rising given our debt situation. So we're going to start issuing the shorter bonds. And so there's like a flip there. And
So the government's going to screw up again, right? So
Right,
now
exactly.
they're issuing short
That's why-
term and the yields are dropping.
Right, but that's why we had, I think this is part of the reason why the yield's dropping, because there's just not as much long-term bonds entering the market because they're issue in the shorter term. Combine that with the fact that the market thinks that the Fed's done. There's been some messaging from some of these Fed officials that, inflation might be coming down and we're done with rate cuts. And so the market might be pricing that in as well. But I agree with Tone that long term, yields are probably going to keep going higher because of these inflation expectations and also just the structural inflationary pressures like underinvestment, deglobalization, demographics, as well as the pretty much what we all think is that they're going to have to go back to resort to the money printing again. All those four things are structurally inflationary, and so you'll likely see yields kind of rise in that situation.
Ugly thoughts on this?
Well, I have a totally different view.
Good.
I don't believe in macroeconomics, and I think you will have the same opinion within the next 2 years. I don't think you'll be able to make sense of what's going to happen.
Is macroeconomics just astrology for men?
It's worse than that, I think.
How so?
You're trying to grab hold of a moving target. And I mean, you're schooled in that. I understand all the ivory tower crowd looks at that. But you have to start thinking differently because nothing's going to make sense if you're going to go look at all those old indicators based on what we have now. I'll leave it at that. If you want my opinions, I think we had a very significant long-term breakout on gold. In 1980, I was around. I was an active gold trader. We thought gold was going to $3,000. In fact, you read some of the news. Who was that guy?
Yeah, I found an article quoting Doug Casey. How many of you are familiar with Doug Casey's work? And I can't find the article anymore. It was from 1981. The article was published. I still have like the screenshots, and I think I saved the PDF version of it. And he was absolutely certain gold was going to go to like $3,000 or $5,000.
6,000 was the top. 36.
Within a couple of years. And he thought everything would collapse and gold would be 5,000. And he's been wrong for 45 years.
Yes. And now I think it will happen. I think one of the things, too, that macroeconomics brings you into air is that you're thinking in dollars and you have things like upside targets. And Tone's a good teacher because he doesn't believe in targets, and I don't either. And I think it's going to be especially true in Bitcoin and other things if things don't make sense. So if you think you're making it a whole bunch in Bitcoin, you never sell your HODL. But hey, you know what? Your HODL, reward yourself. Take a little bit of that and reward yourself. If you're a small investor, buy yourself a new laptop. If you're a large investor, buy a Lambo. But that's how you reward yourself for being successful. But I think the focus on macroeconomics is going to get a lot of people in trouble, particularly in the years ahead. I think if we when we reset, we can probably go back to it.
Yeah. Let's agree on that. But I do want to talk a little bit about something that James Lavish has talked about, which is this debt spiral crisis. We have all this U.S. Treasury debt that's coming due. Rates are much higher, even at 4+% or whatever, than they were when they were issued, right? And for whatever reason, the U.S. Treasury decided to issue short-term paper just to save a few basis points because the 30-year and the 10-year were a little bit higher. That seemed like a very dumb decision. Sam, do you have thoughts on how imminent is this debt spiral where the U.S. has to refinance this massive growing debt at much higher rates than maybe they anticipated?
Yeah, I mean, if you look at just the maturity profile of the government's debt, I think it was something about 50% in the next year they'll have to refinance because they issued so much on the short term while rates were really low when they should have been issuing them at the long term. And that's kind of what Stanley Druckenmiller was saying recently when he said Janet Yellen should have been fired because it was the biggest blunder in Treasury history because of that. And it's interesting because households took advantage of it by refinancing their mortgages at low rates. Corporations took advantage of the low rates by extending their maturities on their debt. but our government did not. And so what is likely to happen, and what many think are going to happen, is that eventually the Treasury and the Fed are really at odds with one another, because the Fed's trying to raise rates to bring inflation down. But every time they raise rates, it increases the interest expense and blows out the deficits even more, which is inflationary. And so you're in this period of fiscal dominance where the fiscal situation overrides anything the Fed's trying to do with interest rates to bring inflation down. And so eventually you'll get to a situation where if the Fed tries to keep interest rates long or higher for longer, then the Treasury is going to be like, okay, this is a problem for us. Like, from a national security standpoint, we need interest rates to go down, because from a debt situation, we have to be able to roll over our debt at lower rates because we can't afford the higher rates anymore. So I think eventually the U.S. government, the Fed independence is going to erode away, and the U.S. government's going to basically tap them on the shoulder and tell them that they got to cut rates.
Yeah, thank you for that. So we got 4 minutes left. We're going to go to closing comments shortly, but I wanted to drop a little bomb here, which is, if you look at federal net outlays, St. Louis Fed has a great graph on this. Over decades, the amount that the U.S. government has to pay on their interest is actually pretty low compared to what it was, for example, in World War II. So Morgan Housel, who is not a Bitcoiner, but he has a good essay on this. How the heck, I'm trying not to cuss on stage. My Merrill Lynch trading floor days sometimes comes out. How the heck are we going to pay down this freaking debt? And the answer is, we never are, but we will grow our way out of it because we did it before. Seems a bit risky. What do you guys think about that?
I'll comment on that real quick. I think everyone knows we're not going to grow our way out of this debt. And
are you sure?
You just try to. They just try to keep it going as long as they can. But I think people at the top of government, even the economists at the government, even Janet Yellen herself, has to understand that this is not sustainable. They just can't tell you that they know that it's not sustainable. But
so the short-term growth in GDP exceeding both sort of inflation and
that's still not gonna. It's still not gonna solve the problem, because we're redenominating the debt, and the biggest problem.
What do you mean by redenominating?
Well, you keep issuing a new debt,
got it.
Because
Reissuing
we're
debt.
always in a deficit, so the government cannot live within their means. And now, in a high interest rate environment, they're going to realize how bad this is, where by the end of this decade, the interest on the debt is going to be more than tax collection. Just the interest on the debt. And the reason why this happens is, I believe the founding fathers of America actually understood something. They understood exponential growth and exponential functions. And they felt, this is just my opinion, they felt that if they forced the government to borrow money instead of just printing it, it would make them borrow less money. Because if you give the government the ability to just print money, they're going to go out of control and they're just going to print it. So if we make you borrow, you're going to understand that if you're borrowing, you have to pay it back with interest. So you're going to restrain yourself. After 200 years, this has not, finally, it's starting to go exponential. But had the government had the ability to print money and not borrow, there would never be interest on the money that's being created by the government. And had they only created the same amount of money they had up to now, instead of $33 trillion in debt, it would probably be around 4 or 5 trillion in total. The majority of it is cumulative interest over the last 40, 50 years. Or maybe it will be closer to 8 trillion. But on the flip side, if you allow government to just print and not borrow, the debt also could have been 100 trillion by now, right? Because they would have had no restraints. So it's this double-edged sword, and every single government has always screwed this up forever, and it's going to happen again.
Yeah, so we're 16 seconds. Do we want to go over Ugly? Go ahead.
Just
real quick, and then we'll do our Bitcoin price stuff, and then maybe we'll take one question.
Saifedean Ammous in the Bitcoin Standard outlined very thoroughly that the only viable competition to Bitcoin is the gold standard. I'm going to stick my neck out, but I do think you will see governments resurrect the gold standard, not because they want to, but because they have to. We will also need to change our currency. They'll probably have to do a 10. Right now, we don't even have coinage that works. If we do a 10-to-1 split, it doesn't change anything, but we have to have a functional coinage in the market. Now, maybe we can do it digitally, but these are two things that I'm not going to be surprised at.
So thank you for that, Peter Schiff. Sam, do you agree?
In terms of being able to grow our way out of it.
That
what we're
and
talking
also
about?
the gold point that we're going to go back to a
Oh
gold
yeah,
standard.
well,
Do
gold.
you see that?
I don't think we'll
see
go
that,
back to
yeah.
the gold standard because I still think it has the limitations of lack of portability and verifiability and divisibility. So Bitcoin's
It's perfect for governments, though.
Yeah, and it would just be going backwards. Bitcoin's going forwards, and if you think about growing your way out of it, if I'm being optimistic, most GDP growth comes from innovation. If you look back historically, and when you think about what's going to cause us to be innovative, it's being able to save. It goes back to the money. If we can't save as individuals, you're not going to make long-term investments, and that's where majority of innovations come from. Is small business endeavors innovating, and so if we want to try to grow our way out of it, it has to come from a productivity miracle, and most productivity comes from innovation. And so if individuals can finally save in money that can't be debased, perhaps we can have that productivity miracle that allows us to grow out of this debt situation because we have a money that people can save. The thing is, can it happen fast enough? Can that productivity miracle brought on by Bitcoin adoption happen fast enough for us to grow our way out of it? And that's really where I kind of get a little bit pessimistic. But if I am optimistic about our abilities, it starts with Bitcoin's ability to allow people to save, which will bring on more innovations in things like energy, which will drive GDP forward.
Real quick, I just want to give my closing statement with the price of Bitcoin.
Sure.
The name of this panel is the bull market back, and Sam answered it as well. I think all of us on the panel believe that the bull market is back, and since everyone always asks me what the price predictions are, I'm going to give you my best guess at the moment. And based on TA, I was expecting a multi-day correction starting 2 days ago. I've been talking about it on my channel, even though I haven't streamed it a bit just because of the conference. And I did expect us to top around, I think, Monday, around that time, Sunday, Monday. If we break the high like today, tomorrow, which I think we will, I'm expecting the next top to be approximately 48,000, and sometime in early to mid-January, right in time for the ETF announcement. So right now, I'm targeting that we're going to pump into the ETF announcement. And regardless if that ETF announcement is positive or negative, I believe it'll be a sell the news event. If we're pumping into it and we're sitting at 48,000 or higher early January when the SEC goes on air.
That's a total buzzkill, by the way. 48,000? Man.
In a couple
All
of
right.
weeks?
Ugly.
I think that's okay.
That's all right. Ugly?
I don't make price predictions because your guess is as good as mine. That's not how you successfully trade. Although there are some things you can look at, and I would say that Bitcoin does not top until it has a 50% close to a 50% move in a 24-hour period. We haven't had that, but also we're not at contract highs, so it may not happen until we get there to that point. This is the problem. Now you have gold that reached contract highs, so that's
you,
a whole
Peter.
different market.
Thank you, Peter.
All right, we do have to wrap up with
Yeah, let's
one
wrap
quick
up.
question. Nelly had a question, right? Oh, wait. We'll try to answer as quickly as possible, and then I do want to hand off the mic to D++ for the Lightning LARP.
Can one of you just kind of describe how the dollar was weakened to spark this rally in a way that a non-finance person can understand? And also, I follow a lot of analysts that are talking about truflation and how we're actually below 2%. Some indicators show. So, what does that mean for the greater economic picture and the deceleration?
I'll take it first. I'll try to answer it really quickly. I don't think the dollar weakened at all. I know that gold is just slightly at a new all-time high and Bitcoin is doing well.
I think she's talking about the money printing.
Right, and that's the thing. I don't think it was that. I think what weakened, what causes a lot of this stuff, I don't think it's the dollar itself that's getting weaker. It's the perception and trust in the dollar that's getting weaker. It's the confiscation of other countries' money, using the SWIFT system for political purposes. I think it's not the actual money printing. I think the money printing can get globally absorbed. There's plenty of demand for dollars, and other countries are printing even more. So it's not that. So I think that's the lead cause of it. And your other question was
Inflation.
So inflation being 2% or 5%, I think is too negligible for us in America. For it to make a substantial difference. I know it sounds kind of crazy, but and I know things are more expensive, but again, I don't think inflation is the main driver either. Over a long time, yes, but in a single year, you don't feel it as much. Only after 5 years do you really, really feel it.
For the first question with the dollar, I mean, to break down this in a way that's easy, interest rates and currency rates are really tied together closely. When bond yields are higher for a country, it attracts more capital, and that strengthens the underlying currency that's denominated in those bonds. And so now, the last month, we've seen those yields fall. And so when that happens, more funds flow out of that, and the dollar weakens as a result. So interest rates and currencies are really tied together in terms of their value. And so we've seen rates fall this past month. That's also why we see the dollar fall. And so that's why, as well, you see the way that the Treasury's issuing all these bonds. They did it in a way where they didn't flood the long end bonds with more of them. And so that allowed the yields to fall, which then allowed the dollar to fall. And okay, so that's how I could explain it simply. I hope that made sense. But currency rates are a very complicated part of the market.
Thank you. And with that, we are going to wrap. Thank you to the panelists, Tone, Ugly Goat,
All right,
and
thanks,
Sam.
guys.
Let's hear it for them.